Hello and welcome to Core Finance. I'm Matt Brown. I'm joined today by Alessio Rastani, who is founder and CEO of leadingtrader.com. Thank you very much for coming onto the show today.
Yeah, thanks so much.
We're going to talk about Tesla.
Oh, yeah.
It's a bit of a Marmite trade. Some people
That's
like
right.
it, some people don't. People who try to short it have got it wrong.
Right.
It's a very, very interesting stock that divides
What I
people.
want to talk about with yourself and your viewers is we're going to break down why we should bet against Tesla. And that
Understood.
always divides people. It kind of is a controversial thing because a lot of folks certainly seem to like Tesla as a company and its brand because, it's an produce electric cars, which I actually think, look, no matter what you think of Tesla, I do agree that they produce very beautiful cars. I've been in one of them. I certainly like their philosophy of producing clean energy cars and electricity. I think it's a great idea. But as far as the stock is concerned, that's a different matter. So you can like Tesla as a company, which I'm going to show you today why you shouldn't, because the company itself fundamentally is weak. But so whether you like Tesla or not, I'm going to show you why we should be thinking about shorting or going against and betting against Tesla.
And that's very important for viewers, and certainly people new to markets will pick products they're emotionally attached to.
Yes.
And that doesn't necessarily mean that it's a good investment.
It's certainly usually a mistake.
Yes.
Yeah. I agree with you. And it's psychologically, it's okay for people to choose something they feel comfortable with. But again, never fall in love with your investment or stock, which is famously said by many great traders in the past. So shall we have a look at the chart?
Sure.
So Matt, first of all, what is your view of Tesla before we actually talk about it? We're taking a look at this chart. Technically and fundamentally, what do you think about it?
I think it's overvalued. I mean, when you look at the fundamentals of the company and then the future earnings, as that to me does not feel like an investment. The thing is, though, if I was to have it in my portfolio, it would be a small part of my portfolio. I certainly wouldn't have it as a huge or larger makeup of my portfolio, because it's on future earnings.
Yes.
It's on what could be.
Absolutely.
And a lot of the time that is the stock. That's how I pick stocks.
Yes, sure.
However, we're talking about 10 years, 15 years. This is something, it's disruptive. It's something that's good to have. It's like having Bitcoin. It's like having, in the internet bubble, there were stocks, the companies that weren't producing or having an income, but it's interesting to have. And it sits into that bracket for me. It's not a core holding.
Absolutely, and I agree with you on those points. And I'm going to give folks and viewers give an idea why fundamentally it's a very bad company, regardless of what good companies or good stuff they make. Number one, here's some facts. I'm going to stick with the facts here. Number one, as I put down here, according to Bloomberg, Tesla has burned through nearly $10 billion since 2012, holds another $10 billion in debt, and has never been a profitable company. Number two, they face competition. Here's the thing. This is the reason why I've refused to buy a Tesla, because I think they are overpriced and overvalued, both stock and car, by the way. So the thing is that BMW and Audi are soon going to enter the electric. They already have with some of their i8 and i3. But the thing is, the BMW i8 actually is a hybrid at the moment. It's not a fully electric car. So in my opinion, certainly the price of Tesla cars will drop once competition enters the market. You got BMW, Audi, other car manufacturers bringing more electric cars. So this is going to face competition already there, apart from the fundamentals being bad. Number three, there's a low demand right now for electric cars. Sure, I think maybe 10 years from now it'll be different. But at the moment, there's still low demand for electric cars. They're very expensive too. And the stock, as you've been saying, Matt, I agree with you, it's overvalued, overbought. And I've been waiting for essentially some technical signals, chart signals, to tell us when to go and short it. I don't think we're there yet, though, but I think we're going to get close to it. We've got on this chart, we can see that it's been in a tremendous uptrend. Having said that, though, from an Elliott wave perspective, and for folks who don't know what that means, simply Elliott wave means that markets tend to trend in 5 waves. That wave 5 we can see there is usually, it is, according to Elliott wave theory, the final wave, the last move before a correction or before a new trend develops, presumably the downside. And guys, if we just take a look at that chart over there, we can see got negative divergence. Negative divergence, for folks not aware, is the first sign of a weakening of the upward trend. It's like the ship about to turn the other direction, weakening of the trend. And what we have here is that trend line. The purple line shows that the uptrend line. What I'm waiting for, and to confirm going short. So before we can even consider getting short on this, what I want to see is I want to see a clean break of that trend line. Now we did kind of break it just recently, but we went back above it again, Matt. That tells me that now is not probably a good time to go short. But as I've drawn on that chart, if this is the start of a wave 3, we don't know if it is yet. But here's what we can do. For folks who want to consider shorting this stock, going against Tesla, what you can do is put a sell stop order.
Yep, sell to open.
For entry.
Yep.
A sell stop order at 340 or just below 340. Because if we roll over and if we take out that 340, which is just below that trend line, then we can get short. And my target would actually be close to 300. That would be our wave 3 target, just near the lows of July. And then potentially at 280. And who knows, that might actually be the start of the selling on the stock or a potential downtrend. I think that fundamentally it doesn't make sense for the stock. I mean, sure, markets have done irrational things in the past. Markets are not rational. It's mostly psychology.
Yes.
But I think from a fundamental and technical perspective, we should be considering shorting Tesla when the time comes, again, at those levels I mentioned on the chart.
I mean, certainly from point of view, if we see a downturn in the stock market,
yes,
this is one to look at, because
it
becomes a point where people, if they've gone into the stock psychologically and they like the products, etc., will start to look at the fundamentals, really go through those.
Yes.
So if we go into a bear market, this is a stock to short.
Yeah, I agree with you 100%.
One fear I do have are the gaps that we see in the chart. I mean, obviously to the downside and the upside. So always be aware of that. Don't put a large short on if you can't deal with a gap to the upside. But
that's a good point. That's a good point. And I agree with you. I think that for one thing, Tesla has refused to follow the stock market strength. It's been lagging behind the stock market. So I agree with you. I think that when the selling comes in the stock market, this is one to consider. It will certainly be sold, in my opinion, anyway.
But I'm sure, as we said at the start of the show, it's quite a divisive stock. So if you have any comments whether you think you should go long, go short, whether we're right, wrong, whatever, please do comment.
I would just say this, a great guy who comes on this show, Bill Hubbard, I think he said that fall in love with your neighbor's wife, but not your stock or investment.
Understood. Well, on that note, thank you very much for joining us today.